The Bank of Ghana has maintained its monetary policy rate at 29%. Addressing the press at its 118th monetary policy announcement on Monday, Governor of the Central Bank, Dr. Ernest Addison, cited the need to sustain the tight monetary policy stance and step up liquidity management operations, among others. There's more in the following report. The maintenance of the policy rate at 29% is the second time the Bank of Ghana is maintaining the rate this year. This means the rate that commercial banks use as a reference for lending still remains at 29%. Addressing the press at its 118th monetary policy announcement on Monday, May 27, 2024, Governor of the Bank of Ghana, Dr. Ernest Addison, explained that the latest forecast shows a slightly elevated inflation profile on the account of recent exchange rate pressures and adjustments in transportation fares, thus they need to stay the rate.
The latest forecast shows a slightly elevated inflation profile on account of recent exchange rate pressures and adjustments in transportation fares. However, the projections show that inflation will remain within the monetary policy consultation clause of 13 to 17% at the end of the year. These forecasts are contingent on sustaining the tight monetary policy stance, including aggressive liquidity management operations. Given these considerations, the committee decided to maintain the monetary policy rate at 29%.
One key issue that was topical at this 118th Monetary Policy Committee press briefing was the issue of the continuous volatility of the local currency. Outlining measures to ensure that the situation is stemmed, Governor of the Bank of Ghana, Dr. Ernest Addison, instructed forex bureaus to ensure that they desist from publishing unauthorized forex rates on their social media handles.
The Bank of Ghana remains fully committed to provide stability in the exchange rate for the Citi. The bank has enough foreign exchange reserves to support the market, and economic agents should stop engaging in speculative purchases, as they will suffer economic losses when the correction occurs. The Bank of Ghana is taking measures to improve market conduct and instill sanity in the market for foreign exchange. To this end, the bank has worked with the Ghana Association of Banks to streamline documentation requirements for foreign payments to minimize the incentives to resort to the informal markets. To deal with the high demand pressures on the foreign exchange market, the bank has taken steps in the past few weeks to directly absorb foreign exchange needs of some corporate institutions, and this has led to a reduced pipeline demand for foreign exchange from the commercial banks. The bank is fully aware of the operations of illegal operators in the foreign exchange market and is working with the Financial Intelligence Center to sanitize the market.
For the Bank of Ghana, while the implementation of these policies align well with the IMF program, there's a need to ensure that the recent currency depreciation is not fixed into the pricing behavior of businesses and on inflation expectations. For Citi Business News, my name is Neteli Ajao.